Investing in stocks for complete beginners. Most people think investing is only for the rich, that you need thousands of dollars, fancy suits, or a finance degree. But here's the truth. If you can save a little money, if you've ever bought something online, if you use apps, banks, or big brands every day, you are already surrounded by stocks. The problem isn't money. The problem is fear and confusion. And today, we're removing both. This video is for complete beginners. No experience, no complicated charts, no hype, just the basics you actually need to start. Let's start with the simplest question. What is a stock? Stock means ownership. When you buy a stock, you're buying a tiny piece of a real company. Not a lottery ticket, not gambling, a real business that sells real products and services. If the company grows and earns more money, your piece becomes more valuable. That's it. You don't need to own the whole company, even a small piece counts. Now, how do people make money from stocks? There are two main ways. First, the stock price goes up. You buy a stock at one price. Later, if the company grows and more people want it, the price rises. You sell it for more than you paid. That difference is your profit. Second, dividends. Some companies share part of their profits with shareholders. You get paid just for owning the stock. Not all stocks pay dividends, but many do. Here's something beginners need to hear. You do not need to trade every day. That's what movies and social media show. But long-term investors usually win. Why? Because good companies grow over time. Daily price movements don't matter if you're investing for years. So how do you choose your first stock? Keep it boring. Boring is good. Start with companies you already know and trust. Think about banks you use, apps on your phone, brands you buy from regularly. If a company is everywhere, profitable, and stable, it's usually a safer place to start than unknown hype stocks. Avoid anything that promises quick money or guaranteed profits. In investing, slow and steady beats fast and risky. Now let's talk about risk, because this scares beginners the most. Yes, stocks go up and down. That's normal. The mistake beginners make is panicking when prices drop. A price drop does not always mean the company is failing. Sometimes the whole market is just having a bad day. If the business is still strong, long-term investors stay calm. That's why you should only invest money you don't need immediately. Not rent money, not emergency savings. Invest money meant to grow over time. Another beginner mistake? Trying to be perfect. You don't need to buy at the perfect price. You don't need to predict the market. Starting is more important than timing. Even small, consistent investments matter. Someone who invests a little every month often beats someone who waits years for the right moment. Here's a powerful mindset shift. Investing is delayed gratification. You are planting seeds today so future you can live easier. No one claps when you invest quietly. No one sees the patience. But years later, the results speak. Before you invest, always ask yourself 3 questions. 1. Do I understand what this company does? 2. Is this a real, stable business? 3. Am I willing to hold this long term? The answer is yes. You're already thinking like an investor. Let's keep this realistic. You won't get rich overnight, and that's okay. Real wealth is built slowly, consistently, and intentionally. Stocks are not magic. They're tools. And like any tool, they work best when used properly. If you're a beginner, the most important step isn't picking the best stock. It's starting with knowledge, patience, and discipline. Learn first. Start small. Stay consistent. Your future self will thank you.